Hi everyone, this is Paul Fouché, Chief Investment Officer at New Road Capital, giving you your March market update. So March been quite a volatile month, obviously on the back of the Iranian conflict that started at the beginning of the month. So if we look at the equity markets, the local all share down just over 10%, 10.5% down for the month. MSCI World, which is your developed market equities, is down 6% for the month, and then emerging market equities down 13% for the month in dollars. So if you look at the kind of extent to which the markets fell, the US specifically, and leading into that MSCI World Index, that developed market index, has held up the best. It's actually, although the US is involved in the conflict, it's probably the most immune to any kind of larger fallout, an increase in scale from the conflict. So, that's due to its energy independence as well as its geographical positioning. So obviously, we've been exposed to the US, and the US assets have actually held up quite nicely in our portfolios, although still down a bit, held up very nicely. I'm looking at the equity valuations. So obviously, equity valuations from February are a lot more attractive in this dip. You're sitting MSCI World now, down about two points on a PE value. So that's a price to earnings value just over the month. So for us, looking through this conflict, our thesis has not changed. We're still very bullish on the markets. We still like what we see fundamentally in front of us. And yeah, we've actually been using this opportunity. We've been selling some of our defensive holdings in the portfolios and buying up equities during this dip, which is really what you should be doing in a time like this. So yeah, valuation's looking pretty good. If we look at inflation, so the sort of underlying economic backdrop in the US, inflation at 2.4% and core inflation at 2.5%, so still very low. Obviously people are worried about what the oil price does to inflation going forward. We think the oil price will spike intermittently and then start to come down again. There's a lot of sort of headwinds on that oil price that we think will still ultimately be there long term. Obviously, you've got this short-term supply demand mismatch due to the Hormuz Strait and obviously limitation on oil coming out of there. But we think that once that solves itself, we'll probably see the oil price coming down quite quickly. So something we're bearing in mind, but something we're not spending too much energy on in the short term, and rather focusing on the medium to long term. So if you look at the oil price, it went from about $60 a barrel up to about $106 a barrel. As of today, this is in the end of the month. As of today, it's sitting at, I think, just short of $100 a barrel at the moment. That's Brent crude. So yeah, it's run up substantially, but we think going forward it'll actually start to taper off a little bit. Feeding into SA inflation, so SA inflation still down at the 3% mark, so we're still very happy with SA inflation. Is obviously the petrol prices coming through will have an increase or cause an increase on that inflation number going forward. But remember, inflation is not a once-off step increase. It's more of an ongoing, price increase as you move through time. So we think although that petrol price, diesel price will come up this month, we still think long-term, as I say, pressure on the oil price, we think long-term, and you'll probably see, fuel prices starting to trend down again. If you just look at the last few years in South Africa, the petrol price is actually lower than it was in its peak. I think its peak was in 2021, 2022. And we're still below that, even after this increase that we're seeing come through now. If we look at Rand dollar, so, our US assets, as I say, held up really well. The Rand weakened to the dollar by about 1 Rand over the month. So it started at just below $16, 16 Rand to the dollar, and ended at just below 17 Rand to the dollar. So, and that's why we hold those offshore assets. And particularly if you've listened to my notes before, talk a lot about the US treasuries that we own, and those were quite defensive. They did sell off a bit, because the Rand popped against the US dollar and really the dollar strengthened against the Rand, that provides a lot of Rand protection in the portfolios, and we've been able to use that allocation and start buying equities a little bit lower, which is always an attractive thing and a prudent thing to do when you do see market volatility. If you see bonds, SA bonds sold off also quite a bit, but still looking very, very attractive. So the Albi return down 6.8% for the month in rands, but still, we think the yields that you're getting on those bonds, notwithstanding the capital moves, we think are still very attractive. So if you look at the yield curve, on the longer end of the South African yield curve, we're still getting yields, north of 9%, almost 10% at the moment. So still very attractive on a yield basis. and just reweighting our portfolios to take advantage of that as well. And then if you look at offshore bonds, so the G7, that's your biggest 7 economies, down 3% for the month, and then US long-term treasuries down 4% for the month in dollars. So as I said, down 4% in dollars, but in rands actually up for the month. So we were able to use some of that exposure and start to buy equities. So if you look at our portfolios, how they handled the month, actually very strong. I think our most aggressive fund down about 6% for the month. Our most conservative fund down just over 1% for the month. So we've been able to protect capital quite nicely through this downturn. Yeah, pretty excited about the opportunities that are sitting in front of us. So as always, you're going to get these times of short-term volatility. You're going to get these externalities on the market, but long-term, as professional investors, we got to look through the noise and we got to think about what we actually see in front of us on a medium to long-term basis, and that's what we look to take advantage of. So happy with where the portfolios are. We have made some adjustments, as I say, buying some equities. And we think long-term still very constructive on the markets. If you need anything, as always, please don't hesitate to contact me or the team. All the best, and we'll chat in May on your April market update. Take care. Bye.